Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update. We'll update our earnings trades and then finish off with Joe's analysis. So let's get started here. Okay, so indice-wise, SPX, NDX, Russell, Dow, everything in state one. Russell was in two, did 4 days ago, went back into one. Obviously, it's ripped higher since then. Sector-wise, everything in one except for energy, which is having a good day today. So, but high-wise, last week we haven't met. Well, I haven't been in this meeting since I think it was the third. No, we took that off. So it's been since June. So it's been a while. Anyway, you can see green pie has grown significantly. We're down in the 30s, and right now we're at 70. And if you look at state ones, we're over 45%. So we're overbought at this point. Not much left as far as twos coming in here. We got five. So any kind of wave higher would have to come from eights, sevens, fives, all those. Um, so let's take a look at the market pulse. The states overall. So like I said, twos, just had a huge drop. When we get those kind of mini pullbacks, we get those spikes like this in twos. So down kind of bare bones level, down 5%. So obviously back here we're in the twos, but that was a little bit significant long run there from October to April. So I wouldn't expect another one of those near term. But typically we do have these, kind of build up. You can see the last one, we got up right around 49%. So we're 47-ish, right around 47. But, we'll just have to wait and see how things go. We're getting a little tick up. So the eights are going into seven. So we want to see those start going to five, and then five, typically the one. Threes usually don't get much action, but most of the twos have already gone back to one. So just a few more percentages they can scrape out of there, but sustained. We'd like to see these sevens, fives start transitioning upwards. So new highs, huge moves here. 500, up here we had 781, so it's kind of back here 789, similar type thing. And that was kind of at the beginning of this huge run up, that big spike there, but we also had some big ones in here, 713. Obviously this is very bullish, having new highs, especially with a lot of the smaller caps participating this time. So big numbers, as long as we're getting the spikes and greens, typically we're going higher. So the lows obviously flatlined here. So haven't really had a big significant low since back here end October of last year. So everything else has been pretty minor overall. I mean, 200 is not a big deal. So, but that's obviously bullish out there. So, all of these have transitioned over the 20s, the 50s, 200s never wavered. So, just getting bigger and bigger. So big moves there. Had another big spike here, transition state ones. So we had talked about this one back in May, 200. So these are still big, 171, 180. I mean, 173, 181. So those are big numbers. So like I said, those will peter off here because we only have 5% in state two. So, and then bullish, bearish. We're at 70. Last time peaked right around 70. Before we kind of, at least the states pulled back. Obviously, this was fueled, S&P was fueled by, kind of NVIDIA and all those big names going up higher. But, a lot of the Russell and stuff got hit during this kind of pullback. So we'll see how this one goes. Obviously, NVIDIA, we had some bad earnings from um, ASML. A lot of those semiconductors pulled back today pretty significantly, but yeah, we'll see. 70 was kind of the last one. So just like I said, with the state ones, we're kind of at that threshold. So we'll go to the charts here. SPX, more than current. It's more than the average days, a lot more than the average move, almost double. Um, so not much. We're getting out of here. This chart, obviously, once we got over that 3, we had a um, big run up. So, and there's just not much I can pull off this chart right now. We'll go to the chart here. So let's pull up the annotations. So 54, below that 5,000 was down here. So 58 is top of the range. So, we never really had a retest. Let me get this tool back up. Never really got back to retest that range down in here, but I think the key, like we've been talking about for a while, is this 20-day. That's pretty much held. So that would be, the key support level I'd be watching. Obviously, to the top end, we have 5,800, but I would say kind of just keep our eyes on 20-day, and obviously that goes up every day as we're trending higher. So 5534, and we're about 50 points higher than that. With a pretty decent down day today. So let's keep your eye on that one. I think if that breaks and roll over, probably get minor pullback. But until then, kind of even a down day like this doesn't mean much until we kind of break that level. I think 20 days. So that's it for SPX. Russell, straight up. Broke that 2100 here, and just took off. So that was on Thursday, the 11th, and just parabolic upwards, and then ran into target 3. So it's the kind of upward I'd be looking at, upward resistance 2274. So not a typical move. Typically we get up here and retest and go. This one just went straight up to it. I think there's a lot of pent up demand for this. It's just been so sideways for so long, and people just jumped on board, and we got that straight up to T3. So key is going to be that 2274. Getting above that, turn that into support, and then from there we can do it like S&P did and run higher. But downward support, we got the entry price 2125, so pretty much just call it 2100. Staying above that's going to be very important. We're obviously pretty far off from that right now, just based those huge moves that we had there. So but just 4 days in, already beat the current move. I mean the average move of the current. So just kind of keep your eye on that T3. And I was looking at prices today. I think we got near it, 2278. So pretty much right on it, 2274. So within 4 points of the high today, and then it pulled back significantly after at 10 o'clock. So that's your level to the upside to watch. And then, if we can get above that for net support, then 2,300 really shouldn't be too much of a problem. But and the other thing we talk about, I'll pull it up on charts here. So you can pretty much use every 100 points as support and resistance for the Russell. So we're well above 50 and 200. That moves just, crazy. 2,300 to the top, but support wise, you can also 2,200. If we get down there and test that, so it's pretty much every 100. But like I said, once we get above that 21 to shot above, we're in the new range, 21 to 23. So downside wise, um, we got 2,200 is kind of what I'd be looking at on that. And I think we're 40 points above that. Pretty decent down day, but after those huge days, we usually get some kind of little bit of clawback and see if we find our legs, support, and then see if we can resume higher. But the pie, obviously, overbought, but the new highs and things like that are just showing green lights. So we'll see if this pullback, if we find support, and then see if we can kind of resume higher. But it's kind of where we're at on that. What has been helpful, not crude, 10-year down to 416. So that's definitely positive for net positive, especially for the small caps. 1 month lows here. Obviously back here in March we were down 4. So we had that big drop down here, December 3.8 something. So we'll see if we can kind of continue this grind lower. It seems like we got a nice little trend line from here to here, kind of pointing lower. And I think people are, as long as the inflation ratings are good, and economy stuff still trucking along, then we could see this, continue lower. So let's look at Fed. All right, so July, 2 weeks away, I believe. Yeah, 2 weeks. No cut for July, but now we have September first cut, pretty much 93%. So that's right before, a couple months before the election. Obviously, it's been a big move since a month ago. You can see 56, now we're at 93. So, we'll keep our eye on that, but definitely by November, they're kind of factoring almost 2 at that point. So this has been just like the September big moves here, kind of shift down. One cut, so this was 50 and now this is almost 60. So it's been shifting. And then December, yeah, it's kind of in between that 2 and 3 cuts. So it's been a big change. Here's 18. Now it's the highest number would be 3 cuts. So people are expecting cuts here. After July, I would expect more and more kind of talk about that. So we'll see what the Fed does and the commentary and stuff like that after there. So balance sheet, I was kind of looking at this. Seems to be, we had this nice trend line. It just seems to be kind of flattening out a little bit, but we'll just keep our eye on it. This is getting near. So this is basically right in here. I call it 7 trillion. That was like COVID, right? So getting kind of near that level, but kind of look in here, it just seems to be kind of flattening out, not moving much week to week, but we'll see. Anytime of like policy shifts from tightening to easing, that's big green flag for stocks. So even if they, are tapering less, selling less, that's still a net positive overall, I think, for stocks. So, all right. So let's market wrap. Open up to questions, comments.
Yeah, this is Dave. I always usually have one for here, so
Yeah.
apologize for those that just don't like to hear me yap. But one question: the pie charts are updated every night, right? So when we're looking at the ones for today, they're actually like Tuesday close to Tuesday close, or
Yeah. Yeah.
that
It's
sort of. Okay,
previous close.
so that's a pretty good percentage change in 1 week. When I'm just
Oh,
looking
yeah.
at the red and the green there, pretty
Right.
good change. And like you said, I think that was all due to the inflation numbers from the CPI and PPI last week. I think PPI was the first week that it actually, or first month that it actually went down a little and not up less than expected.
Mhm.
So I think that's the reason for all the optimism in September cuts. We'll see. There's after July, there's no August meeting for FOMC, so there's just the Jackson Hole thing, which I think will probably set the tone for the expectations or the whatever the percentage of cut, you know, for the
Going
Fed fund
forward.
futures thing. I think I'm not going to put too much stock in that until after the Jackson Hole discussion, and then I'll bet on maybe that.
Yeah.
Um, but the you're right. The biggest reason for all the green is like most of the Russell is finally decided to get a little bit bullish with some anticipated rate cuts. So I
Right.
stand by my last week's kind of conviction that whenever there is the first rate cut, I think the Russell will be the place to look for the outperforming individual stocks, in my opinion. The big mega caps are kind of down, and I think they're down today till about where they were last Friday after the down day Friday. So
Yeah.
so the breadth is good. So I think you're right on that. So we'll see. As long as there's good inflation numbers and we don't get a bad one in between a couple of good ones, I think that'll be encouraging for the broader market to a good extent. So
Right.
my two cents. Okay, fine. And if Joe's on board here, Joe, sorry, I did call you back Monday. I have a grandson visiting for a couple of weeks, so I didn't been not making my phone calls back. Anyway, sorry, Joe.
Hey, family
No,
first.
that's all good, Dave. Yes, indeed.
All right. Thanks, Abe. All right. Anyone else? Questions, comments?
Looks like a very interesting rotation in
Yeah.
the market. So we'll see if it can keep it up.
Right.
Sudhir, it's breathtaking, isn't it? I mean, I'm just blown away by the action of the last week, literally exasperated.
Yeah. I think at least what the talking heads are saying is that the Russell move is signaling that the Fed is going to, for sure, lower interest rates.
Yeah.
Yep.
I would agree.
Who knows?
Or at least that's what people are betting.
Yeah, that's what people are betting.
Oh. All right. Thanks, Adir. All right, let's go through earnings. Not too much. So we had two bullish pre-runners. Let those close out for their profit targets. So good news there. Bearish. So we have three open there. mRNA, AMT, Wayfair. We had two close out for wins. So we're a little down on this, but maybe today. I think Wayfair's down like huge today. Yeah, down 5%. So those ones, yeah, we get nice little pullback. Maybe we'll be able to close those out and move on to more bullish scene. But the only other ones are bullish runners. We just had that one open up, Goldman on 16th. That's bullish runner there. So that just started. So I think that it was up today, down a little. So But that's it so far. And pull up the plan. So we got confirmed one another bearish pre-runner. Next one, NXPI, that's been good. Yeah, don't knock on wood for non-movers. That one's been good. So those are kind of the upcoming trades here before the next meeting. The other ones are still estimated. That's it. Any questions on earnings? No? All right, let's wrap for me. You ready, Joe?
All right, Josh, welcome back. Let me share here. I just, as I said, I'm really exasperated about the action of the markets in the last 2 weeks. I mean, as you and Dave pointed out, the catalyst for Russell exploding seemed to be, the inflation numbers last Thursday and Friday. At the time, I mean, Thursday, I just blown away that the Russell could go up that much and, the NASDAQ could go down that much. I'll pull that up in a minute. Dave, you mentioned the pie change percentage, and I just didn't, it's something, it's one thing to talk about how the numbers change. I think what Josh and I, really prefer, so you give the backdrop, but okay, you got the change. What the heck has the market done, over the next 3, 6, and 12 months after some of these changes occur? I'm hoping, for next week, I'll have more with regards to the expected change when we get such a significant change in the overall pie. Where I landed up going this week, something that caught my eye was the state ones. And, if you take a look here, basically, what is it, column B. And this is the state one transitions, on a daily basis, greater than 175 any day. There have only been 61 days where we've had greater than 175 state one transitions going back to 2007, a little over 1% of the time. 2 of them have happened this week. I mean, I just can't imagine, we've been talking about surprises to the upside for a long time. Honestly, I think I was lulled to sleep by the market, just kind of slowly, making, higher highs, higher lows, the Russell going sideways, and then next Thursday hit, or last Thursday rather. So going back to state ones, 61, since 2007, 2 in the last week, 16 of these days happened in 2016, just before the election, as it turns out. So I'm just going to scroll down here a little bit for you.
So, Joe?
Yeah,
Question.
Kadir?
So maybe you're getting to this, but when you have these unusually high transitions to state one, is that a bullish signal or a topping bearish signal?
I believe the former, and I don't have as much homework done on it as I want, but the former, not toppish. And I will have, more to say on this next week to support. But just, and I'm just scrolling down slowly, column B, there are lots of years where you don't have any days like this. And as I say, 16 of the 61 happened right around the election in 2016. All right. We had none between the election of 2020 and last week. Zero. And, you know, it gets me wondering, wow, you know, we talk about the, you know, the markets maybe not being impacted too much by presidential elections, but, you know, this might suggest a little bit differently. You know, we did have 4 such occurrences, you know, right around the 2020 election, and then nothing until last week. You know, one thing to be aware of as I scroll down here, column D is the number of symbols, you know, followed in the database. That was lower, so the percentage, you know, was even higher, you know, when you go back to the early teens. But you can see, I mean, 2007, there was one day in 2009, 10, none in 08. You know, it really wasn't until 2014 where we had 6 days where you started to get a few, you know, above this level. So I just think, you know, the pockets of time around the 16 election, around the 20 election, and here we are, you know, and obviously everything that happened over the last week, from economic announcements to, you know, the situation on Saturday seems to have changed potentially the calculus for, you know, the results in November. So, you know, these are state one transitions, you know, for next week. You know, I will speak to the overall pie as well. Let me find the couple charts. Got to find them here, you know, that, you know, kind of in support of, here's the 20 period, okay? The deer, you know, this is when we had that cluster of over 1,675s, you know, back in 2020, and then off we ran. You know, we ran 1,000 points in the S&P. You had a little hiccup with a very slight 2 with no retracements, and whammo, away you went, okay? No indication of a top, you know, with those couple numbers.
Yeah, I was looking
again,
at
this is
16 as
yeah.
well, and it's the
Go
same.
ahead.
It took off.
I'm sorry, what was that?
While you were talking, I pulled up a monthly chart on SPY and went back to the 2016 election, and it also was a bullish signal at that time.
That's my next chart for you, Sudhir. Amen, baby. You know, here we are. And, you know, the November election, and away we went. You know, very, you know, interesting, the symmetry of both situations. You had a big run, a real short 2, and then another big 1. And in this case, you had 2 other big, you know, run-ups in one. So, you know, I don't think it would really be, and I'm sure that because, you know, where are we, up to 70 and change in the pie now. You know, one of the days in the last week, you know, the pie jumped 7% one day. We went from 51 to 50, you know, 8 or 59%. I don't think any of this is toppish. And
where is your
you know,
where is your most days above 170 that's not near the presidential election, most recent, other than this week?
Above 70, off the top of my head, I don't know. We haven't had it many in a while.
I mean, in your Excel file. Can you switch to that?
Not in the one that I pulled. I don't think in the one that I pulled up. That was a specialty file.
The state one transition.
I mean, when we think about it, you know, the pie, you know, the market has continued to really have a hell of a rally, and the pie has been sleepy. I mean, you know, we've been, you know, 30 to 60 in the pie. You know, just some internal changes, but certainly no extremes. And in terms of extremes, something else I pulled up, I can't wait to see tomorrow's release. Again, this is, you know, not it's just a gray gauge, but I can't wait to see, how, this is AAII, what this bullishness, and the yearly high in bullishness was 52%, we're at 49 now. I think that's one to just keep an eye on tomorrow. Again, I don't think we're anywhere near a top. How high we can go, I don't know. I think the earnings seem to be doing better. Time will tell, we shall see. But let me see, SBA, yeah. So that was just, I did want to talk a little bit about, the state ones, as I say. I'll roll that into the big pie next week. And then here is, in terms, so just backing up before I go here, we've had 61 days out of 4,413 going back to 2007, where we've had greater than 175 symbols transition into state one. 12 of them were in 2016, and 2 of them were last week. I don't think it's insignificant. And then just in terms of why we're so exasperated by last week's market action, here is the Russell 2000 days greater than 3% since 2007. We've had 120 of them. And what we, have almost never had is, and so, here we are, it would be column E, F, and G. And, what I was especially interested in was column E and G and the differential, where you got the Russell up 3%. And I just wanted to see what S&P and NASDAQ did on those days. And then to the right, we've got state one percentages along with, complete pie. So, the thing that just still blows me away is the fact that Russell last Thursday was up 3.57% and the NASDAQ was down 2.25%. To your point of rotation, Nadir, and, can we anticipate those rotations? Boy, I just don't know. I think you've heard me say many times, I still think the markets work the same way as they always have. The thing that's changed is the speed. And, last Thursday is just, the word went out, lower rates, let's go with the Russell and, get out of the high flyers. And, inside here, there's only one day that's been like that, I think, in the going back to 2007. Ironically, if you go up to line 104, you can see, again, around the November, around the presidential election, November of 20. There we go. We had the NASDAQ down 2.25%, and the Russell was up over 4%. So you had that rotation around the election result in 2020. But then, it certainly wasn't a top. The market did, just fine coming out of that. We just got some short-term rotation. As I scroll up, there's nothing like it. Those 2 days, I think there was one other point. Yeah, there's one in, March of 20, where you actually had the NASDAQ down 1%, versus a 3+% increase in Russell. I think that's it. I mean, I damn near an historic day last Thursday. And then, we can get into all the charts in terms of the retracements and the NDX and all of that. Again, when you put it all together, I think it surprises it to the upside. This is nothing but bullish action, not topping action. I got a few more charts that I'll go through. Last week we were talking about leadership. Certainly, the financials, have done, awful well. Actually, I'll go backwards a little bit, and just when we go down to the sector overview, and this is why, we added, the current percentage move, the max move inside of that. It gives us a good gauge with one quick look. Are we near the short-term highs without having to go to every chart or not? And you can see many of those moves are banging, the current moves are up against the high of this move. And, look at it. What do we got? 10 out of 11 are, in state ones. I mean, it just, and many of them from a day's perspective with room to run. So, again, I don't see this as any kind of, top in the market. Let's go back. Okay, so XLF, of course, just a long way to go from a timing perspective, but, it took off last week. We obviously, the earnings, whether it's an expansion of, a different type of income with deals on Wall Street, that seemed to be the hint of things, good for business. And, away we go in a state one. I mean, Ashokan is magic. We know that the states aren't foolproof, certainly, but man, a lot of them between the state signals and, as Josh always talks about, the different targets, they really are quite insightful. Russell, not much to talk about, except from my mind. And again, I think the speed with which, look at us, we're banging up against, state 3 in 4 days, madness. What does that mean for the markets? Well, again, I don't think it means anything negative. Let's see. Oh, yeah, I thought the equal weighted S&P was worth pulling up. Also, maybe ironically, rolled into state 1 same time that the Russell did. And yeah, it might be interesting. Again, haven't had a chance to do that, but to compare this thing from a state perspective to the Russell, wouldn't surprise me if there's quite a bit of similarity. But anyway, this thing has rolled into state 1 and now is trading at an all-time high. So, again, it would surprise me that it's going to roll over and die. SPX, as Josh pointed out, in terms of short-term overbought, that just, we get into some shorter-term moving averages banging up against the top of a band, distance above the 20-day. You pick it, we're probably getting close to that. NDX, here it is, the other day. It reminds me a little bit of, we had a couple days like that where we had the big red engulfing candle. Most recently, let me see, what's that date? That was July 11th, last week with the rotation. But, we had the bearish engulfing candle here back on May 23rd. This is the one I was talking about, this April 4th, bearish engulfing candle. We got a rollover from there. We're due for a retracement of some of this stuff. And it doesn't mean that the market's going to top out because of it. Josh pointed out ASML. I'll pull that chart up quickly. That seems to be the catalyst for maybe why NASDAQ is rolling over today. XLF we had, NVIDIA, I think, many would say it's a NVIDIA market, and closed to 126, down big today. And it actually has traded to a new short-term low at 116 and change today. I'm not sure exactly where it is. So, do we get an A, B, C down? Does this thing, maybe trade down into the 110, 115 range on a symmetrical ABC? I think that's likely and certainly not unhealthy, but certainly one to watch. It'll be interesting to see whether it rolls into a state 2 as well. As Josh always talks about, we'll we've traded through the 117. Will target 3 turn out to be support? It'll be interesting to see where it closes today and see if maybe that's what it turns out to be. Just a couple more. Here's the ASML. This thing's getting blasted today, down 11%. So that'll be a big red candle. I think one to keep an eye on, over the next couple days. These earnings come out. We get big reactions, in some of them. The ones where we get the big reactions, I think it's just critical to keep an eye on them a day or 2 or 3 after the earnings to see whether there's follow through to the sell-off, whether it's just because people are taking profits after monster runs. And ASML is, kind of the top of the list of that at this point. And then one we mentioned last week when we were talking about leadership, this is PGR, kind of a lazy insurance stock. That's one hell of a bearish engulfing pattern. They came in at 264. I mean, their earnings blew away. Well, they didn't blow away the expectations, but, they certainly exceeded last year. I think they were close in line at 264, but they said something, whether it's loan loss reserves or something, but obviously, got up to target 2 and then had a major reversal. So would guess that we're not going to be getting the leadership out of the insurance companies. But that's just kind of a follow-up to something we talked about last week. So that's all I had. I wish I had more time because there's so much to be done in terms of the research, with the data in the platform. Try to have more for you next week with regards to the pie. And, we'll just see where we are a week from now. But happy to take any comments or questions.
I think you really have a unique set of indicators that you could publish. Like previously you had shown when the pie reached statistics on when the pie reached above 70 or below 30 or stuff like that. And now this one where you have unusually high stake 1 transitions. And what happened, it's a unique set of data that Delphian has. And just like there's the Keltner channel indicator or whatever, there's probably some unique indicators you can come out of this, what you're showing to publish, that you really can't get anywhere else.
Well, Josh, you would know better than I because you've been here, twice as long or plus. But Sudhir, I couldn't agree with you more. I think they're, a Shook's, genius in this platform, can really help us, continue to help us in the markets. And, we still have a ways to go with things. We're making progress, but, there is a hell of a lot in here that can really help people. And thanks for the comment. I agree with you.
Hey, Joe.
And part of the thing is to, right to you, Dave, but is to try to keep it simplified. Big believer in that. And please, anybody, if when Josh and I are presenting, if you think we're too wordy or you have some constructive criticisms, please, we want to hear it. We really appreciate all of you joining us week after week.
I personally like the research you show. I just would like if it was in conclusions were like in one place, a document on the share drive or something. It would be very interesting. I think you got some very unique stuff.
We'll work towards that, Sudhir, posting that stuff in a more complete
It'd be nice
fashion,
to
maybe.
just
Yes,
have
Dave.
like a library on the site there where, we can, put stuff in there, I would think, so you don't have to go to my Google share drive.
Yeah. But it's very interesting stuff, Joe, that you're presenting.
Say Joe or
Yes,
Joe.
Dave.
One comment I'd like to make about the sleeping pie and the query that Sudhir opened up a couple of discussions ago, is is that maybe think about this. I think that the TINA trade is the reason why we saw such a big change recently, and maybe generically that's a good thing to consider. TINA meaning there is no alternative. I remember back in 2020 when the pandemic hit, and the market went down crazy, right? And then went back up real crazy, but it didn't go up with all the stocks in the stock market making highs. It went up for a few stocks making highs all the time, kind of like where we've been. The Magnificent Seven, back when it was what was it called? The five stocks that were the first group with Netflix.
The
FANG stocks, yeah. Now then there's Apple was added FANG, and it was FANG stocks or whatever. But there's in all of those situations, even when these indices were going up, they were going up with very few stocks, relatively speaking, pushing those indices up. Most people didn't know where to put their money, right? There is no alternative. Where do we put our money? Well, back in 2000, everything's closed. They put their money in companies that didn't have to have, brick and mortar to go to. Netflix, Amazon, Google, Microsoft, all the very same stocks, right? There is no alternative. When nobody knows where to put their money, that's where they put their money. AI is the same thing. Well, where do we put AI money? We don't know, but we'll put it back in the bank stocks and the same cloud stocks that we've been putting it in. Now, there's an alternative place to put your money, right? With at least the last two inflation reports last week. Well, maybe there's some other places we could put money. So when the greatest number, and so that's why I think the pie sleeps in all those times when there is no alternative. The pie kind of sleeps, even if the indices go up. It's just a few stocks driving them up. So I would not be surprised. And I think today also I've seen some of the mega caps, some of those big names be the ones that are the most down, because that's where people say, well, they've run up so much, maybe I'll take some profits and gamble a little bit on some of these other beaten down areas that have been beaten down for so long, like the Russell. There's been no reason to actually get bullish in the Russell since interest rates were high back in 2022. All that time that we've had interest rates right where they are, the Russell's been floundering around doing nothing pretty much. So if it could change, well, there's a lot of stocks in the Russell, right? A lot more. It's the biggest index, even though it's not it's just got the most breadth in it. So when it's positive, it helps out all the pie chart probably the most is the Russell. When the Russell does good, the pie chart probably does its best. So that's why I think that there might be, what are other reasons? And I'm just thinking out loud here. What are the other reasons that there could be no when's there no alternative? Right before elections is another point, right? Well, we don't know what stocks are going to do well and what ones aren't until the election is over with and we see who's going to be in the White House. So during that period of time when there is no alternative, we don't know yet, or we're going to just wait, the pie chart will probably maybe die back a little bit. The last comment I wanted to make was back in news driving the frequency of changeover, or I won't say, some news is persistent, some news is, in and out. One day it's, one Wall Street guy hyping up a stock and the stock moves up and then it moves back down because just one guy was, made the news that day. But when it's, there could be a rate change for a really good reason now, we've had that possibility raise its head several times, and it keeps getting beaten back because we haven't had enough consecutive months of falling inflation for the Fed to change their mind. But with two reports now, there's that it came back into play. The I wanted to ask you if you have in your data, back when when they announced that there were vaccines for the pandemic, for COVID-19. I kind of remember remember listening to, I don't know, one of the news channels where that was a big turning point. It's like, oh, well, you know, we didn't know how long we'd be locked up, but now there's vaccines that are available or in trials or whatever. But the fact that vaccines were available for the pandemic was a big change in investor sentiment about all of those other companies that were locked out during the pandemic. So those kind of news items that are persistent, I think, are the ones that have a tendency to maybe affect what Sudhir was asking about. When does the change actually, the rotations actually start to sink in, bite, and take hold? And my stock answer to that is whenever the reason for the most recent change becomes persistent and not just a 1 day, 2 days kind of a news item. Anyway, that's my thought. I'd be curious as to see how the I'll try to find out, go back and see when the vaccines were announced. But I do remember there was a big up day for most markets that day. Big up day. Anyway, that's my comment on, there is an alternative in the sleeping pie. So maybe it's woken up for a while. Anyway, that's my comments.
I'll bet it has. And one other thing, I mean, between us and you guys, gals are, the ones who have been with Delphian a long time, and we have not been able to do this research yet, but whether it's the Mag 7, the FANGs, I gotta believe that, again, getting back to speed, the strongest stocks are the ones that get to target 3 the fastest. And that's a query I've been wanting to do for a long, long time. We're limited in our resources, haven't been able to do it, but one of these days we'll get that out, and that'll be something for us to talk about and truly define. That'll be very narrow leadership, but leadership is such an important part of the markets, and it's dynamic and evolving. But trying to be ahead of the top 10, 20, or 30 issues in the marketplace would be really something nice to have, or at least have the percentages, because we're always just playing percentages, but have the percentages on our side.
All right,
right,
well,
Josh?
thank you guys. Yeah. Any last questions, comments before we wrap it up? All right, well, thank you all for attending. We'll do it again next week.
Thanks for joining, everybody.
Thank you, guys.
Thank you.